Hey there trading enthusiast, we have power-packed video ahead, but before we start we request you to kindly hit that subscribe button, and the reason to ask is you may watch this video and pass on, but you would miss the future videos. But this channel isn't just about trading strategies. It's about cultivating the trader's mindset, embracing risk management, and mastering the psychology of the markets. We'll equip you with the tools and knowledge needed to navigate the ever-changing landscape. Remember, trading is a lifelong journey of growth and adaptation. By subscribing to our channel, you'll stay on the cutting edge of market trends, discover new techniques, and gain valuable insights that can give you a competitive edge. Let's dive in.
In today's video we will see about the Martin strategy all-in-one scalp toolkit on gold using 1-minute time frame. First we will see the rules and terminology of the strategy. These are the rules for a valid signal candle for long and short setups. You may pause the video and note it down. Next we will see the terminology of signal candle. This candle satisfies all the entry rules of Martin strategy, and next comes trade candle. It is the candle close above the signal candle, and a valid trade candle should form within 3 candle of signal candle high or low, and we use this candle to place our trades. This is an example of valid long entry where we have 3 green rows in Martin trend meter, green Martin stochastic trend, price above Martin cloud. Once all rules are satisfied, we place a short limit long above the high of trade candle, with stop loss below previous consolidation or swing low, and take 1:1.5 risk reward and vice versa for a short setup. Signal candles gives us the signal to go long or short, whereas a trade candle gives us a confirmation of the signal candle, and presents us entry place, and it should form within 3 candles of signal candle. After learning the price movement dynamics of gold, we have designed with 1:1.5 risk reward, as it has very high win rate, and trade should trigger within the 3 candle of trade candle. If not, then the trade gets invalidated and wait for next new signal candle. Great, we are different. We don't want to mislead you with strategy performance only on a trendy day, so we are showing you live backtest of gold on trendy day followed by the performance of the strategy on a flat day. This way you will be able to distinguish the performance of the Martin strategy on different market conditions, thus giving you realistic results of the strategy. Make sure you watch the video till the end if you want to take your trading career ahead. First we will see trendy day, backtest,
bullish trend. So after this video, after this clip, I will show you how the strategy performed on these non-volatile days, as you can see here, so that you'll get to know how the strategy performs in both the market dynamics, when there's a volatility, where there's a strong trend, and where there's no volatility and where there is no trend. Get to know how the strategy performs. So let me just move to that particular day. So we'll move to 1-minute time frame. We're going to do scalping. So we'll scalp using 1-minute time frame using the Martin strategy, where we use total of 4 indicators. So Martin stochastic trend, Martin trend meter, Martin cloud, and a range indicator just for trade placement. This one you can use for trade placement. So let's see. I'll just fast forward. So this is the start of the day. So we'll wait for a breakout. There we go. We have a breakout. Let me just check. So we'll just mark the high. So this is a signal candle. This is a trade candle. Just zoom in. So this is a signal candle. We're having a breakout. That's a signal candle. That's a trade candle closing right above the high of the signal candle. So we'll place a stop limit now. From there, we don't have any consolidation. So we take the previous swing below as a stop loss. From there, 1.5 risk reward. Let's see. Target hit. So let me just mark the high. We'll calculate only the candle closes as our breakouts or breakdown points. So we are not concerned about the weeks. So we'll wait for a breakout of this resistance over here to mark it as a signal candle. Let's see. Price is within the cloud. So again, we have a breakdown. That's our signal candle with all red. Signal candle. We have a trade candle closing right below the signal candle low. So we'll place a stop limit short. As we have a consolidation here, we place a stop loss right above the consolidation high. From there, 1:1.5 risk reward. Let's see. Boom, target hit. So why we have selected is because as we have backtested so many days of gold, so I've just noticed that 1.5 risk reward works perfect on gold. So let's move on. So there was no valid signal here because everything is closing right below the other candles. So we'll just mark the high because we are above the cloud, so we will just see long signals. So we have a breakout. This is a signal candle. This is a trade candle. So we place a stop limit long above the high of the signal candle, trade candle. The stop loss right below this consolidation here. So from there, 1.5 risk reward. Simple yet powerful trading strategy. There we go. Target hit. Back-to-back 3 trades. There we go. We mark the high. We have a signal candle closing right above the high of the resistance. So that's a signal candle. Trade candle closing right above the signal candle. So we are stop limit. Sorry, that's not a valid signal candle because we are still 1 red in a trend meter. So we wait for a breakout of this range over here. Again here, there we go. So that's a signal candle. All greens here. Trade candle closing right above the signal candle high. So there's a stop limit long. Stop loss. We don't have any consolidation in between. So we take previous swing low, which is this. From there, 1.5 risk reward. Let's see. Boom, target hit. simple and powerful trading strategy. So we have a single candle here. No, that's not a single candle because we are 2 greens and 1 red. That's not a valid single candle. That's why the indicators didn't print a buy signal because it was about to go sideways. So again, let me just delete this and we'll mark a new high. So we have a breakdown here, but there was no follow through. So that's why we didn't take that trade. There we go. We have a breakout, single candle, trade candle. So we place the stop limit long. From there, we have this small consolidation here. So we place the stop loss right below that. From there, 1.5 risk reward. Target hit. So when there's a volatile day, you go to book so many trades in a day, which would just take your equity curve higher and higher and higher with successful trades. There we go. We have a breakdown. Oh, let me just mark the low. So that's a signal candle. We have a trade candle, which has appeared within the 3 candles of signal candle. So that's a valid trade candle. So we place a stop limit short at the low of this trade candle. From there, we have this consolidation here. So we place a stop loss right above the high of that consolidation. From there, 1.5 risk reward. Let's see. So it just missed our targets by very, very few points. It hit our stops. It's okay. Let's move on. So let me just mark the high in case we get a buy signal. There we go. We got a breakout. That's a signal candle. We have closing this one as straight candle, but there was no follow through, so that trade didn't trigger. So we will just move on. So we have a breakdown, signal candle, trade candle. So we place a stop limit short. So I'll just show you the complete day, how this strategy performed in this total day. We don't have any consolidation in between, so we are taking the previous swing high as a stop loss. From there, 1.5 risk reward. Market just went sideways. I think so it's gonna hit our stops. It's okay because we are already in good profit, so it wouldn't matter if we hit the stop also. It wouldn't. So what are the trades? We will exit before the end of the day. So there we go. We hit our stops. So let me just mark this high. So after hitting that stops, we got again another signal, which is a signal candle. We have this one as a trade candle. So we place a stop limit long. Stop loss, we don't have any rally. So we place below this swing low. From there, 1.5 risk reward. Boom, target hit. So this loss was recovered double the times on this trade. So let's see. So we have a continuous rally where we wouldn't have gotten a chance to re-enter. So we'll wait for a consolidation or breakout. So we'll just mark this high. There we go. Signal candle, no trade candles formed. Getting validated. Again, we have a breakout at the high. So we have a signal candle, trade candle. So we place a stop limit long above the high of the signal candle, but trade candle. But that trade didn't trigger because we didn't have the 3 candles passed, but it has formed as an inside bar. So here we have a breakout. That's our signal candle closing right above the trade candle, but there was no follow through. Then again signal candle, no trade candles. Let me just mark that high. We just need to keep marking the previous swing highs and swing lows to know whether the market is breaking out or breaking down. There we go. So this was our signal candle. As you can see, we are closing right above that resistance. Then we formed a trade candle which closed right above the signal candle high. So that marks as our trade candle. We place a stop limit long. The trade was triggered within the 3 candles of this signal candle. So we don't have any consolidation in between. So we take the previous swing low as a stop loss. From there, 1.5 risk reward. Target hit. So we have a breakdown, but there was no sell signals here, which indicates that the market will reverse from here. I just mark the high. We have a breakdown, signal candle, but there was no trade candle. Invalidated. There we go. We have a breakout of the cloud that marks as our signal candle. That's our trade candle. So we place a stop limit long above the high of the trade candle. Stop loss, we don't have any consolidation in between, so we take the previous swing low. From there, 1.5 risk reward. Target hit. So I'll show you the results at the last, like how many trades we took on this day and how many profits and how much is the total loss. Again, price is within the cloud, so there is no trade candles formed after a signal candle. So again, there's no trade candles. There we go. Let me just mark the resistance. So we have a signal candle, no trade candles. Again, we have a signal candle, we have a trade candle here. Let me just show you. So this was a signal candle. That's our trade candle. As you get used to the strategy, you can easily spot with your naked eyes, which is a signal candle, and which is a valid trade candle. So we have a small consolidation here. So we take that as a stop loss. From there, 1.5 risk reward. So I'm just taking every single signals which is appearing in the strategy so that you'll get to know how the strategy performed. So let me just mark. So we hit the stops. So we wait for a confirmation and a breakdown for a new short entry. Just mark the low. So we have a signal candle, trade candle, but there was no follow through, which invalidated the trade. There we go, new fresh breakout of the cloud. So we have a signal candle, we have a trade candle. As you see at the bottom, everything is green, everything is a go. The market will enter into a volatile zone. So place a stop limit long, stop loss right below the swing low, 1.5 risk reward. Let's see. So end of the day. So we will just exit here. So this was the total trades, and there is a big bullish day. So we will see how many trades in total. So we had total 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades on this day, and we'll quickly see the stats. So we had total 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades on this day, and we'll quickly see the stats. So let's see how the daily candle looked. So this is how the daily candle looked when there's a strong volatile day. We'll quickly see the profits, and we'll just next move on to the non-volatile week. So we'll get to see how the strategy is performing in both the market dynamics.
Trendy day has concluded. Here are the fabulous results of Martin's strategy all-in-one scalp toolkit, where we had total of 12 trades with 9 wins of total $37.51 profits and 3 loss, with total minus $9.16 with net P&L of $28.35 in a single day. This is an example of performance of the Martin strategy on a trendy day. Now let's see how the strategy performs on a non-volatile trendless day. Before we move on, let's see the results on Martin Trade Journal, where we have calculated $1,000 per 0.1 lot of gold. So with $5,000 we trade with 0.5 lot, and these are the results where you have fabulous 26.25% ROI and cumulative profits of $1,417 in a single day, and these types of trendy day appears 30% of the time, which boosts your equity curve higher. Now we will see the performance of the Martin strategy all-in-one scalp toolkit on a non-volatile week and gauge the performance of the strategy. Let's dive. If you are enjoying, make sure you leave a like.
Hey guys, so here we are on one daily time frame of gold. So we're gonna backtest and see how the strategy performed in this particular 5 days, that's previous week. So if we are able to make money in this kind of market where the market is just staying flat without any volatile move, without any trend, then for sure you're gonna make a hell lot of money when the market is trending and when there's a strong volatile move. So to keep it realistic and practical, so I will just show you when there's a no trend, when the market is consolidating, or when there's no volatile, because many people fail to show you how the strategy is performing when the market is staying flat, so which we are different. So we want to show you the realistic thing, so how the strategy is designed, how we perform in every kind of market dynamics. So I just don't want to show you these kind of move where there is only a strong profits, when there's a huge profits with a good winning ratio. I want to show you where many strategies or many people fail to make money in this sideways market. So we will see how the strategy performed, how the market strategy performed, how the scalps were successful in this sideways moves where a lot of people fail to make money, and rather they lose and blow their trading accounts by taking random trades, so without any proper robust trading system. Let's see. We'll move to 1 minute time frame. So I have already backtested Monday, so I'll just run the bar replay so that we just don't waste our time and we just don't make the videos big. So there was no proper signal here, as you see. So we are still in a range. We have a breakout signal candle. This is a trade candle, and we place a stop limit long above the high of this trade candle, and we place stop loss right below the consolidation or previous swing low. So there are 2 options to place stop loss. Either you place below the consolidation. So as you can see, there is no consolidation in this small uptrend rally. So that we took the previous low, swing low, as a stop loss from there, 1.5 risk reward ratio. So let's see how this trade went. There we go, targeted. First trade hit the targets precisely. So let's wait for the next trade. So again, there was no breakout, so there was no valid trades here. So again, we have a breakdown, which marks as a signal candle. We have all our conditions met. We are below the range, below the Martin cloud. We have a red in our stochastic trend. We have a red on our trend meter, so which satisfy all the short rules. So again, signal candle, we have a trade candle, stop limit short. Let's see how this went. Here, if you see, there was a consolidation here, so I placed my stop loss right above that high of that consolidation. So that was a stop hit. We lost $2 from here, 3, so net profit is 1.3. Let's go. Again, we have a breakdown. As you can see here, let me just show you. Breakdown, signal candle, trade candle, stop limit short. All conditions met. Let's see. Boom. So that's the momentum I was talking about. Strong momentum, target hit. So let's move on to the next one. So no valid signals here. Again, as you see, we have a breakout signal candle, all greens, trade candle, stop limit long, stop loss below the consolidation low, because I'll just make a short 2.9. So because there was no consolidation, so here there was a consolidation, so I placed a stop loss right below the consolidation. From there, 1.5 risk reward ratio, and we just run it through. There we go, target hit. A simple, robust trading system. That's all you need to make money. Without any proper system, you're gonna just lose money. Signal candle, trade candle, stop limit long, stop loss below the consolidation low, 1.5 risk reward, target hit. Let's move on to the next. There we go, breakdown, signal candle. Then we have a trade candle, stop limit short, right above the high of this consolidation. As you can see, there's a consolidation. We are not taking this into consideration because it is below the signal candle. So we'll take the consolidation only, which is above or below the signal candles. So as a short, this is a signal candle. So we are taking the consolidation right above the signal candle high. So that's a stop loss. From there, 1:5 risk reward. Let's see. So that hit the stop, -$2. Here we go, breakout, signal candle, trade candle. You see, we just broke out, signal candle, trade candle, stop limit long, stop in, back to back 2 losses. It's okay. And let's move further. So the market is just shopping sideways. So you see, price is within the cloud. So there was no follow-throughs moves. If you see, we have a signal candle, trade candle, but there was no follow-through. Again, we have a consolidation, breakdown, signal candle, trade candle, stop limit short, stop loss above the consolidation high, 1:1.5 risk reward. There we go, target hit. Then again, we had a signal candle, trade candle, but there was no follow-through because the strategy predicted that there was a mean reversion. So that's how we just get saved. Again, no trades. Again, we made a range. So see, we have a breakout signal candle. This is a trade candle, stop limit long, stop loss below the consolidation low, target 1:1.5 risk reward, target hit. Next, again, we have a breakdown signal candle. We have a trade candle, which closes right below the signal candle low, stop limit short. As we don't have any consolidation, so we take the previous swing high as a stop loss. From there, 1:1.5 risk reward. Into straight just went a bit longer because there was no momentum on these days. So you just don't expect a huge momentum or momentum trades on these days, because as I've shown you earlier at the start of the clip, that these 4 days the market was staying flat. So if you are able to make money here, then you are going to make money everywhere. So let's see. So end of the day, so we will just exit all our trades at the end of the day, so that as this is an intraday system, we don't want to carry it to the next day. So total trades on this day was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 trades we had on this day. In that, we had 3 losses and 7 wins. So that's the winning ratio. So we will see the next day, and for a second, we'll just see how the strategy performed on Monday, and we'll see the total trades and stats of the day. And we'll move on to the next
End of day 1, we will quickly look at the stats. We had total 10 trades with 7 wins and 3 losses. Total wins is $19.83 and total loss is $5.5 with total net P&L of $14.33. This shows the robust performance of the Martin strategy all-in-one scalp toolkit on a non-volatile day. Let's move on to day 2.
So this is day 2. So we will see how this strategy performed on Tuesday. Let me show you how the Tuesday looked like. So this is how the Tuesday looked like. This is the Tuesday candle. And I just show. So this is Tuesday's candle. We have a strong we had a bearish daily candle on Tuesday. We'll see how the strategy performed. Let's move on. The price is consolidating, so there's no valid signals here. So here, signal candle. Then we have a trade candle, so we take a short. Stop loss right above the high because we don't have any consolidations in between. So from there, 1:1.5 risk reward. And let's see. Target hit, boom, momentum. Let's go to the next trade. We have this consolidation, signal candle, trade candle, stop limit long. So this was a consolidation. You can keep it this from there. So let me just make it a round figure of $1. From there, already we are about to reach our targets. That was a very bad trade, guys, because it just reached around our targets. From there, it just reversed. But if I go as per the rules, then let me just show you. I just bent my rules. That's why I lost it. So from there, 1.5. There you go, perfect target. So we didn't take this consolidation. We took this consolidation here as a stop loss. I can also take this as your stop loss, but we have taken this one from there. So there we go. We'll go for the next trade. From there, we have a breakdown, but there was no valid short signal here. So that's why we are avoiding that. Then again, we have this breakdown here, signal candle, trade candle, but there was no follow through. So let's go. Again, we don't have a valid signal candles. Let's move forward. Let's see. Signal candle, trade candle, no trade candles. Again, signal candle, trade candle, no follow throughs. And then here we go. Then I see. That's a signal candle, trade candle. We take a long stop loss. As there was no consolidation, we are taking the previous swing low as a stop loss. So whatever it is from there, 1:1.5 risk reward, and that's already hit our targets. Okay, here we go. Have red signal candle. As you can see, we have just turned into red signal candle, trade candle. So we'll take a short, but that didn't trigger. So we'll just move on, because if you see, the price didn't cross the trade candle. The next trade candle didn't cross the trade candle. So that's why the trade just invalidated. So we'll move on. Price is within the cloud. Signal candle, no trade candles. Again, signal candle, trade candle, no follow throughs. So that's how we have designed the system, so that users don't go into fake outs. Again, price is within the cloud. No trades when the price is within the cloud. Signal candle, red, trade candle. We take a loss short. So there was no consolidation. So we are taking the high of the previous swing high. From there, 1:1.5 risk reward. Target hit. Let's move forward. So we have a consolidation here. Let me just mark the consolidations. So breakdown, signal candle. We have a trade candle. So we take a short. We have a consolidation here. As you see, the market just consolidated. The price just consolidated here. So we take a stop loss as that. From there, 1:1.5 risk reward. Stop hit. We have a breakout, signal candle, trade candle. We take a long. So we don't have any consolidations here. So we're taking a stop loss as this previous swing low. Stop loss says we had a momentum, but initially it just got fade. So okay, again we have a breakdown. If you see here, breakdown, signal candle, trade candle, get shorter. You see we have a signal candle. That's our signal candle. We have a trade candle. All is red. So we take a short. As we have a consolidation here, so we place a stop loss right here. From there, 1.5. Finally, target hit. Again, breakdown. You will get back-to-back trades as we are trading on 1 minute time frame. So we just need to take all the signals if possible. So signal candle, trade candle, signal candle, trade candle, stop limit short. So we don't have any consolidation. So we're taking the previous swing high as a stop loss. From there, 1.5. Let's see. The trade didn't trigger. So failed. Price is within the cloud. Again, signal candle, trade candle, but there was no follow through. So that trade didn't trigger. So we'll wait for a new signal. Again, no follow throughs, no valid trades. Breakdown, signal candle, no trade candles. There we go. I have a signal candle, trade candle, but there was no follow through. Signal candle, trade candle. This was a valid trade. We have a signal candle, all greens over here. Trade candle, we place a long. You see, this is a signal candle. This is a trade candle. So we are below the consolidation. So we are placing a stop loss over there. From there, 1:1.5. Let's see. Target hit. Again, we have a signal candle, trade candle. So we place a long. Because we are breaking out of our consolidations and we are above the cloud. We are green. Everything is a go. So this was a previous swing low. From there, 1.5. Target hit. Simple yet powerful trade placement mechanism has been designed in Martin Strategy. Again, we have a breakdown, but there was no sell signals in our indicator, so we are just avoiding that candle. Let's see, here we have our signals, but there was no follow through because there was a mean reversion. Here we go, signal candle, trade candle. So next 3 candles has formed the trade candle, so we'll place a short. Stop loss right above this. From there, 1.2 risk reward, 1.5 risk reward. Target hit. Again, consolidation, breakdown, signal candle, trade candle. Let's see if that's a follow through. Yeah, there's a follow through, so we'll place a trade. Signal candle high. Let's see, 1.5. Let me just check why that failed. Everything is in place, so that's a bad luck. Nothing to do with it. Nothing to blame the strategy or price. That's a pure bad luck because we just reached around our targets and we just missed our targets by few points. That's very painful. It's okay, let's move on. Again, breakdown, red, signal candle. We have a trade candle. We had a follow through. So the consolidation high is this one. So we place a stop loss over there. From there, 1.5 risk reward. You just wait for either your targets get hit or your stop loss get hit or the end of the day. That's the three options you're gonna exit. So here we go, target hit. So this loss was recovered in this trade. Let's see for the next signal. We have a breakout, but we don't have our buy signals in our indicators yet, so that's not a valid buy signal. We have a consolidation. Let's see. This was the high signal candle. No, because we don't have our buy signals here. Again, a signal candle, trade candle, no follow throughs. So we're just passing it over. Signal candle, trade candle. So wait, let me just see. No, that's also not a valid signal candle because we are still red. Let me just show you how it looked like on real time. So if you see at this candle close, we are just 2 greens and 1 red. So that's not a valid long. So we'll just move on. Here we had our long signal candle, trade candle closing right above. So we'll place a long over there. Stop loss below the consolidation low, 1.5. Stop it. It's okay. Let's for next. There we go. We have a consolidation, signal candle, trade candle. So we take a short, but there was no follow through. So that was invalidated. Why? Because if you see, you have a signal candle, you have a trade candle, but the price didn't cross the trade candle's low. So that trade was invalidated. The price needs to trigger. So end of the day 2. Let's quickly see the stats, how the day 2 performed. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades. 13. We had total of 13 trades on Tuesday. Let's quickly see the stats.
To conclude it, we had total 13 trades with 9 wins and 4 losses, having total wins of $17.35 and total loss of $7.80 with net P&L of $9.50. Now we will move on to day 3.
All right, day 3, Wednesday. So let's see how the candle looked on Wednesday. This is the candle of Wednesday. So we had a small candle of a small bearish candle. So let's see the backtest. So we have a start up today. Let's move forward. So there was no valid trade. If you see, we have a valid trade. Signal candle closing right above the trade candle. So we place a stop in long, which triggered here. Stop loss below here, to swing low. From there, 1.5 risk reward. So we'll take all the trade setups because we are scalping. So we either win small or big, doesn't matter. We just need to take all the trades. So you go, target hit, first trade hit the target. Let's move on. So we have a breakdown, but we don't have any sell signals in our indicators. So we'll just pass it on. That's why we didn't get any sell signals here because the market was just dropping sideways. So this way we will avoid fake outs. No valid trades. So here we have a breakout, signal candle, trade candle. So we'll play the long. Just zoom in. Signal candle, trade candle, stopping with long. So we'll place below here, stop loss. From there, 1.5 risk reward. Because we don't have any consolidation all the way in this uptrend, in the small up move. So we'll place a stop loss below the swing low, 1.5. Let's see. Target hit. Here we have a signal candle. We have a trade candle with a stop limit long. Stop loss right below the consolidation low. From there, 1.5 risk reward. Stop hit. Here again we have a breakdown, signal candle, trade candle. So we place a stop limit short. Trade candle, but there was no follow through. Let me see if there's a follow through. Yeah, there was a follow through. So we place a stop limit short. So there was no consolidation. So we'll take the swing high as a stop loss. From there, 1.5 risk reward. Stop hit. Back-to-back 2 stop hits after back-to-back 2 consecutive wins. Let's move forward. So don't worry about these stop losses or targets. You just follow the process. That would automatically make you money because you have a robust trading system, which is fail-proof. So again, signal candle, trade candle, no follow through. Trade invalidated. Again, let's see. So we have a signal candle, trade candle. So there's a long. Stop loss below the swing low. 1.5. Stop hit. Let's move on. And let me just check. Signal candle, trade candle, no follow throughs. So that trade was invalidated. No follow throughs. Candles are very small, so that's not a valid trade. Price is within the cloud. Breakout, no trade candles. So if you see a high, no valid trade signals here. There we go. Signal candle, all red. Signal candle, trade candle, we place a short. Stop loss, we don't have any consolidations, so we'll take a swing low high up.
the rally. From there, 1.5 risk reward. That's where our target is. Let's see. Target hit. So this trade just compensated all these three losses. So second candle, trade candle, yeah, we have a valid trade here. So there's a stop limit short. This was the second candle. This was the trade candle. There's a stop loss right above the consolidation high. From there, 1.5 risk reward. And a stop hit. Signal candle, trade candle. So there's a stop limit long. Stop loss right below this consolidation. From there, 1.5. Again, a stop and back-to-back stop losses. So don't worry. No trading system is 100% win rate. So there we go. We have this low breakdown, single candle, trade candle. It is a stop limit short. So one good trade will compensate all your losses. From there, we don't have any consolidation, so we take previous swing high as a stop loss. From there, 1.5 risk reward, which comes right here. That's why we have adjusted our stop loss, because we need either consolidations or swing highs or lows for our stop loss, because that tend to act as a strong supply or demand zone, which would help us save our stop losses. So that's why we have designed the system. So there we go, targeted $5.3 in a single trade, which has compensated all our losses which we had till on this date. After hitting our targets precisely, it has been reversed. So I'm not considering this, because I'm just moving forward, because we are still below the previous resistance high. That's here. So we don't have any single candle. We had single candles, but there was no proper trade candles. Again, single candle, a trade candle, we place a stop limit short. This was a single candle. We have a breakdown. We have closing below the single candle, which marks as a trade candle. So we take this as a stop loss, because there was either this or this. So we are considering this as a stop loss. From there, 1.5 risk reward. Stop hit. It's okay, just follow the system. Let's see. Single candle, trade candle. We have a valid single candle, trade candle, so this is long. From there, stop loss below the swing low, because there was a consolidation. From there, 1.5 risk reward. This trade is taking a long time. It just missed our targets by few points, as you can see, but rules are rules. So we won't touch anything unless our stop loss or targets hit. Stop hit, end of the day. So day 3 has concluded. Wednesday, let's quickly see the stats, how the strategy performed. On this day, we had total of 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 trades, total 11 trades. Let's see the stats.
We concluded we had total 11 trades with 4 wins and 7 losses, with total profits of $9.69 and total loss of $11.29 with net P&L of minus $1.60. This shows in spite of having many losing trades, the strategy has maintained our risk tolerance. Now let's see day 4.
We are here on day 4. Let's see how the daily candles look. So this is the day 4. So we had a doji candle on Thursday. So we'll see how this strategy performed on this day. So let's see. We are at the start of the day. Again, signal candle, trade candle. We place the stop limit long. So from there, we'll take this consolidation low and consolidation here. From there, 1.5. Stop hit, minus $1. We have a breakdown again, back to back. Signal candle, trade candle, no follow through. So we'll move forward. Prices within the club again. Breakout, signal candle, trade candle. We place a long. Stop loss below the consolidation low. 1.5 risk reward. Target hit. 1.6. Loss recovered. Let us wait for a new breakout or breakdown. So here we go. Breakdown, but no sell signal here. We have here a valid short, signal candle, trade candle, but no follow through. Trade invalidated. Here again, signal candle, trade candle. So that's a valid short. There's a stop limit long short. Stop loss right above the previous swing high. 1.5 risk reward. And there we go. We have our targets hit. That was a good momentum trade. So let's see. Here we have breakdown. All red. Breakdown signal candle. That's a trade candle. We place a stop limit short. Stop loss right above previous swing high. From there, 1.5 risk reward. We had a momentum. Let's see in this. It's a target, so fails. Stop hit. It's okay because we are dealing with a non-volatile trading day. So I'm not expecting a lot from this day. I just wanted to show you guys how the strategy performed when the market was flat, when there was no volatility, whether the strategy was successful on these days. If it is, then it is a good to go strategy to trade. So we don't have any valid signals here because we have a trade candles, signal candle, trade candle, but there was no follow through. Here, breakdown, signal candle, trade candle, stop limit short.
So we don't have any consolidation. So we'll take this previous swing high as a stop loss. From there 1.5. Stop here. The price failed to go down. So signal candle, trade candle, no follow through. I'm adjusting on the previous high. Signal candle, trade candle, no follow through again. So just wait for the right trade. See, you have a signal candle, no trade candles formed. There was no valid trades here. Here we have a breakout. Alright, breakout, signal candle, that's our trade candle. You place a stop limit long. As you can see, this is a breakout. So here we have a consolidation. So we place a stop loss here. From there, 1.5 risk reward. Let's see, target hit. Again, we have a consolidation, breakout, signal candle, closing right above the high of the signal candle, answers a trade candle. The long, so that we don't have any, so we can place a stop loss here. 1.5 risk reward. Back to back, target hit. So we'll make just monthly high, signal candle, trade candle, and follow through. Validator. Then you see we have a signal candle, no trade candles formed, signal candle, trade candle, no follow through. That same as from this giant. That's our breakdown. Signal candle, trade candle, we place a stop limit short. That's gonna be a huge play. There we go, boom. Huge trade of the week, $10.5 in a single trade. Again, we have a breakout, signal candle, trade candle, take a long. And then we see there was no follow through, so I'm just gonna invalidate that trade. Again, we have a breakout, signal candle, trade candle, we place a stop limit long. Sorry, we have a valid signal here. Signal candle, closing above it, trade candle, so that's a valid long signal. There's a stop limit long. From the stop loss below the consolidation low, target 1.5. Target hit. So that was a continuous momentum, so there was no valid trades to re-enter. So in these two trades, we got 10 plus 5, around $16 in these two trades. I hope you guys are getting how the strategy is performing. Price is within the cloud. Breakdown, signal candle. And see, you have a breakdown, signal candle, trade candle, so we'll take a long short, which has failed. So we have a stop loss right above the swing high. Stop loss 1.5. End of the day. So there we go. End of day 4, Thursday. So total we had was a wonderful trading day. So 1, 2, 3, 4, 5, 6, 7, 8, 9. So total 10 trades on Thursday. Let's quickly see the stats.
Day 4 is concluded. We had total 10 trades with 6 wins of total profit of $21.60 and 4 losses of total loss of $5.06 with total net P&L of $16.54. Great, now let's move on to last day of the week.
All right, we are on the last day of the week. So we'll see how the strategy performed on the last day of the week. So this is the Friday where we had a bullish candle close. So let's move. Here we have a breakdown, but there was no sell signals in our indicators. So we are just moving forward. Again, we have a breakdown, a signal candle, trade candle, but there was no follow through. So that way, that trade was invalidated. So let's move on. Here we have a valid signal candle, trade candle. So it plays a stop limit long. Stop loss right below the swing low because we don't have any consolidation. We have the small consolidation, but that's our signal candle. So we are taking the previous swing low. From there, 1.5 risk reward ratio. And let's see how the strategy. Stop hit. Moving on to the next signal. Signal candle, non-trade candle. So there was a continuous chop in the market. So we have a signal candle here, trade candle here. So we place a stop limit long. Stop loss below the consolidation low. 1:1.5 risk reward. Again, a stop hit. So signal candle, we have a trade candle. So place a stop limit short. Stop loss right above that. Target 1.5. Let's see. Again, a stop hit. Signal candle, trade candle not follow through, invalidated. Breakdown, signal candle, trade candle, so it is a short because the trade was triggered as the trade candle went down, but it just came up and closed above the high. So it was a stop of 0, 1:1.5. Let's see. Again, the stop in back-to-back stop hits. As you can see, the market was just chopping sideways. So we can't help this price action. So we have to bear with this kind of price action once in a while. It's okay because we have a good win rate, we have good profit, we are in good profits of the week. So again, we have a signal candle, non-trade candles invalidated.
We had a breakdown, but not straight candles. That's why I'm going fast. And let me just mark it. So single candle. Let's see if we get a trade candle. Yeah, we got a trade candle. So we bring a short. Stop loss right above the facing high. 1 is to 1.5 risk reward. Stop it. Single candle, no trade candle. Single candle, no trade candle. Invalidated. Price is within the cloud. Breakdown. So we have a single candle, trade candle. Stop limit short. Right above a high of the swing high. From there, 1 is to 1 is to 5 risk reward. Target hit 1.5. So we have a breakdown signal candle. Now follow through. And moreover, we don't have a sell signal, so we're just ignoring that signal. Then we have breakout. Signal candle, close above that. Break candles, and then a short strong limit long. Stop loss, previous swing low. Target 1 is to 1.5. Stop hit. So Friday was a such a choppy day. As you can see, the price action, how it has been moving up and down in the same range. So as we are dealing with 1 minute time frame, so we have to deal with these chops once in a while again. King, you just mark the low. Similar candle. So we also follow through. So we have a breakdown with a valid red signal. Single candle, we have a close straight candle. Stop limit short. Price stop loss right above the swing high. Target 1 is to 1.5. Let's see. There we go. Boom. Target hit. Let me just mark the high. We just need to mark the high. Wait for the breakout. Second candle, trade candle. So that was a valid trade. So we take a long. No, that trade didn't trigger because 3 candles passed. That trade didn't trigger. So we'll just move on. And let me just mark the high. So here we go. Second candle, trade candle. Stop limit long. Stop loss below the swing low. 1 is to 1.5 risk reward. We just went near the targets. Let's see. Yeah, target hit. Let's move on. So we have a breakdown, signal candle. We have a trade candle. Yep. Those are valid. The signal candle. Closing right below a trade candle. We have a trigger. Stop loss above the swing high. As there was no consolidation in this rally. From there, 1 is to 1.5 risk reward. Let's see. Stop hit. Signal candle, no trade candles. As you can see, we have a signal candle, but there was no follow through. Let me just mark the high. Mark the high with the candle closes. So signal candle, trade candle. So we'll take a stop limit long. Stop loss there. 1 is to 1.5 risk reward. Stop hit. Price is within the cloud. Signal candle, no trade candles. There we go. Signal candle, trade. That was not a valid signal candle because we are 2 green in 10 meter. So that was not a valid trade. Signal candle, trade candle, now follow through. Signal candle, trade candle, we'll take a long. Stop loss below here. Target 1 is to 1.5. Let's see. This trade is taking a long time. There we go, end of the day. So that trade closed flat. So end of a choppy day. As you can see, the market was just chopping in a range, moving up and down, taking all side stops losses. So we can't help it because once in a while you'll get these kind of days. So we will quickly see the stats. So we had total 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 trades in this day, and we'll quickly see the stats, how the strategy performed.
Day 5 is concluded, with total 12 trades with 3 wins of total profit of $7.45 and 9 losses, with total loss of $10.93 with a total net P&L of minus $3.50.
Successfully concluded the backtest of a non-volatile week, and these are the results I have uploaded in Martin Journal. So these are the results as you can see here, and so let us see the stats first. So starting capital $5,000, absolute return $1,981. $630 of max profit. Max loss was minus $259. Average profit $153. Average loss $91. Risk reward 1.68, which is fabulous for a discretionary trading, scalp trading. Winning trades, number of winning trades 29, number of losing trades 26. Total trading trades were 55, winning 52, losing 47. Gross return around 40% in a week. As it is a non-volatile week, so having this percentage of gross return is really fabulous. And highest drawdown we had was $3,400. Highest drawdown percentage was 6.49%. Cumulative capital, which has grown from $5,000 to $6,981. And I have scaled. So every $1,000 as per the scaling, for every $1,000 we will increase 1 extra lot over here. That is 0.1 lot extra per $1,000. So here we have reached $6,000 in a cumulative capital. So I have increased 1 lot on the next trade from the next trade. So
as that we had two scaling opportunities, one over here and one when it reached to $7,000. I have increased the lot size to 0.7. And let's see the equity curve, which has been trending higher and higher. And this is the drawdown. Portfolio is in drawdown. It has been quickly retraced to new equity curve high, which shows a quick recovery of drawdowns. So if you see the winning rate, if you see compare it with the trending day, let's see how the winning percentage was on a trending day. So this is the trending day which I showed you at the start of the clip. So these are the results of that one. So if you see, we had a 75% win rate. So when there's a single trend where there's a one-side trend, you get higher winning rates. And when there's a non-volatile market, when the market is choppy, you'll get around 60% to 55% win rate. So that's more than enough because we are having predefined risk tolerance and predefined rules. So hope you guys like this video. If you like, please give a like. And if you want the indicators, so you can contact me on Telegram or you can mail me. Thank you. Have a nice day.